What if I told you there's a simple way to pay off your mortgage faster, save you thousands of dollars in interest, and finish years ahead of schedule? Today, we're diving into the power of making just one extra mortgage payment per year. Let's get into it. Making extra mortgage payments is like hitting fast forward on your loan payoff. You see, when you pay more than your regular monthly amount, that extra money goes straight towards your principal. By reducing the principal, you lower the interest you'll owe in the future, and that can mean massive savings. Here's an example. On a $300,000 loan at 7% interest over 30 years, you'd pay an estimated $418,500 in interest. But if you make just one extra payment per year, you could save over $128,000 and pay off your loan 8 years earlier. That's a game changer. Your regular mortgage payment mostly covers interest, especially in the early years. But one extra payment can reduce your principal by 5 to 7 times more than a typical payment, drastically cutting your interest costs. There are a few strategies to make this happen. Annual lump sum. Use a bonus or a tax refund to make an annual lump sum or just one single extra payment each year. Monthly installments. Divide your extra payment by 12 and add it to your monthly mortgage payment. For example, if your regular payment is $2,000, add $167 each month. Biweekly payments. Split your monthly payment in half and pay every 2 weeks. By year's end, you'll have made 13 payments instead of 12. Each of these approaches can help you save money, but you'll want to confirm with your lender or servicer that these payments go directly to your principal and not just future payments. The math is simple. A smaller loan balance means less interest. Over time, this accelerates your loan payoff, reducing both the term and the total cost of your mortgage. While overpaying your mortgage has huge benefits, it's not for everyone. Here's a few things that you should make sure of. 1. Have an emergency fund. Once extra money is applied to your mortgage, it's not easily accessible. 2. Check with your lender. Some may charge fees or have rules about how extra payments are applied. 3. Weigh out other priorities. If higher return investments or financial goals take precedence, focus on those first. If you're financially secure, have savings in place, and want to save on interest while paying off your home faster, overpaying on your mortgage is a smart move. But if flexibility or other investments are more important to you, it might not be the right fit. For more information on how to pay off your home faster, visit mortgageresearch.com. And if you found this video helpful, please like and subscribe for more tips, and be sure and hit the notification bell so you never miss an update. Got questions? Drop them in the comments. We're here to help. Thanks so much for watching, and here's to your journey toward financial freedom.